Good morning. How's everybody doing out there? This is Jeremiah Conjure with Annuity Association. Beautiful Monday morning here in Florida. Just wanted to start the day off with getting October's fixed annuity rates report out there. So if you're just tuning in for the first time, this is Annuity Association. Our primary focus here is to help bring more transparency to the annuity buying process for you, the end consumer, to ultimately make an educated decision on which annuity should be right to help you meet your particular objectives. Today, we're talking about fixed annuities, or what are also referred to as multi-year guaranteed annuities. And essentially, a fixed annuity or multi-year guaranteed annuity, also called a MYGA, is the insurance industry's answer to the bank certificate of deposit. So just like a bank CD, these are time deposit vehicles. So in exchange for a guaranteed agreement on a stated amount of time, the insurance company will pay a guaranteed interest rate that's fixed and not tied to market. So they're very safe. There's no market downturn. Things that you would have to worry about there. It works just like a CD, where in exchange for an agreed amount of time, the insurance company will pay a guaranteed interest rate on those dollars. So very attractive in today's low interest rate environment. So if you're the conservative investor looking to just safely grow your money with no market exposure, and you're looking for the highest rates possible, fixed annuities and multi-year guaranteed annuities, or MYGAs, can be a great solution to serve that intended purpose. So first, we're going to go ahead and dive into our disclaimer, get this out of the way. So let me share my screen, and then we will tune into I like to take a look at the current 10-year Treasury to see where that is at the time of this review, as well as the current bank CD rates. So we're going to take a look and do some comparisons here. But before we dive into that, let me go ahead and share my screen where we can take a look at our disclaimer. So this is the State of the Fixed Annuity Market Report for October of 2021. This is a fixed annuity market review brought to you by AnnuityAssociation.com. This is a review, not a recommendation to buy or sell an annuity. No insurance company has endorsed this review in any way, nor did we receive any compensation for this review. This review is meant to be an independent review at the request of website visitors, so they can see our perspective when breaking down the positives and negatives of this particular annuity. Before purchasing any investment product, be sure to do your own due diligence and consult a properly licensed professional should you have specific questions as they relate to your individual circumstances. All names, marks, and materials used for this review are property of their respective owners and not that of AnnuityAssociation.com. While care has been made to ensure this review is complete and accurate, no guarantees are made to the completeness or accuracy. Okay, so let's take a look at the current 10-year Treasury notes. So for those not familiar of why we would be looking at this or even considering, including this in part of this review, and the reason is simple. These types of fixed annuities are really, the rates that are offered are really determined by the bond rates that are available out there. And the 10-year Treasury note happens to be the benchmark, if you will, in terms of determining a short-term yield. So this is a 10-year Treasury note. We're seeing the current rate as of today, October 4th, 2021, at 1.47%. And we have seen it over the last 30 days or last month or so, where it has had some upward momentum. About a month ago, let's see, September, the first week of September, we were at 1.37, and the highest point was back on September 28th at 1.54, and then currently today at 1.47. So these 10-year Treasury yields, they're somewhat of an indicator in terms of what interest rates are doing, what the potential yield is on the short-term interim. And, there is a direct correlation in terms of what is currently being offered on the fixed annuities side of things, because a lot of times, insurance companies are buying up some of these shorter term bond yields to be able to offer some of these rates that they're offering. So we have seen an upward tick. Does it mean that annuity rates are going to go higher than they are today? No, not at all. It really is just an indicator of what the environment is currently like. It does somewhat influence annuity rates, but one of the biggest things that I try to advise my clients on is just understanding that whenever you look back over history of bond rates or interest rates rather rising or declining, first off, it's not very drastic. It's very slow changes over long periods of time. And so what occurs after that, those types of changes happen, is that interest rates offered in fixed annuities will follow, but they're not directly correlated in the time sense. You might see annuity rates lag behind these 10-year Treasury rates. For example, if it were to increase, you might see annuity rates increase months later. So for anyone holding out and thinking that interest rates are going to rise and that's going to be great for someone looking for safe yield, while I would agree with you that is a good thing, you have to still consider the time value of money. So if your money's sitting in cash and you're just praying and hoping and waiting for interest rates to rise and you're waiting for the right time to buy, you really have to consider how much time is your money sitting in cash being depleted by things like inflation, because you're still waiting on the sidelines. So if you look at any time in history where interest rates rose, it was very slow. It was very minimal over time. And, you might be waiting for a lot longer than you expect if you think interest rates are going to go up, 50 basis points to 1%, and then annuity rates will follow right away as well. It's just not going to happen. So just wanted to throw my 2 cents out there. It's just my opinion. Definitely take it with a grain of salt, but it's something to consider. So when we look at the current best CD offers on the market today for October 2021, we're really going to be looking at some of these online establishments that are offering, bank CDs through their website. And who's going to be offering the top ones are generally going to be, outfits that don't have a physical branch. So with that being said, looking at the 5-year length, we have it. This report is going to be ordered. It's using bankrate.com, but we're going to order them in chronological order from highest to lowest. And we'll see the top offer comes in right at 1.2% on a 5-year bank CD. Then you have a 1.1 on a 5-year, 1.06 on a 5-year, so on and so forth. The reason I'm showing this too is to just give you a comparison side by side of what the current best CD offerings are on the marketplace today for October of 2021. And then just momentarily, we're going to dive into the top fixed annuity rate offerings to compare them. One thing to note is that you will find a significantly higher yield in a fixed annuity, multi-year guaranteed annuity, or what's referred to as a MYGA. And it's been that way for a long time now, especially in this low interest rate environment. Not to get too far in the weeds, but banks just can't offer the same rates that an insurance company can on these types of fixed products. So, okay, let's take a look now. What we're going to do is, hopefully you can still see my screen. We're going to go ahead and dive into the fixed annuity report. So right now I just have it filtered. I actually don't have it filtered whatsoever, just for the state of Florida. Now, I do work with clients in all 50 states, and each individual state does govern their own body of insurance. So there may be some companies or some products that are available in Florida that may not be available in the next state. But the best way to get an understanding of what is available, and most of the time they're going to be generally the same, but there can be some one-off occasions where one state may offer a product that another one doesn't. It doesn't mean that it's good, bad, or indifferent. It just may mean that the state governing body hasn't approved that company or that product in that state at that time, but it's pending. So Florida, very annuity friendly. We have a lot of retirees here, so our offers are most likely going to be, some of the best in all 50 states in the country. But if you really want to find out what's specific to your state, feel free to reach out to me directly. If you'd like to work with me directly too, I'd be honored for that opportunity. You can visit our website at annuityassociation.com. Right there on the main page, just click the green button to request your free annuity report. And you'll be taken to a series of opt-in questions, one of those being, would you like to be contacted by an advisor? If you answer yes, I'll contact you personally to see how I can help point you in the right direction, and I'd be grateful for that opportunity. Okay, so here we're going to start looking at the highest rates. Now, these are going to be segmented based on the duration of time or the commitment of time in the contract. So first, we're going to start with the 2-year yield. So we'll come in and look at the top offerings for the 2-year segments, and that is SILAC. If you look just to the left of the insurance company name, you'll see their financial stability rating from AM Best. So you'll see SILAC comes in at B+, and then Ocean View at A-. There obviously is some people that prefer to work with, only the best rated companies, and that's completely understandable. But others are also looking for just the highest yield with the understanding that, hey, I'm willing to take a slightly lower rating on the financial stability of the insurance company, since it's such a shorter duration of time that you're really committing to, in exchange for a higher rate of return. So you'll see SILAC comes in at 1.85% guaranteed compounded interest for that 2-year period of time. In the 2-year product, they do not offer any free withdrawals on that SILAC multi-year guaranteed annuity. Here we have Ocean View Life, which is an A- rated company with their Harbor View multi-year guaranteed annuity. They're currently offering a 1.65% compounded interest rate for 2 years, and they do offer free withdrawals up to 10% per year starting in contracts year 2. So if you're electing to turn on some form of income, maybe you're just looking to take interest only as a supplemental income stream, in that particular product, you could do that starting in year 2 with no questions asked, no surrender charges or fees to do that. All right, moving on down. So we're looking at the 3-year duration of products now in the fixed annuities and MYGA space. We have Ocean View with their same Harbor View annuity, but in the 3-year, and we're seeing rates offered in that currently at 2.35% compounded interest. And again, they offer free withdrawals starting in contract year 2, followed by Sagicor at 2.25 with a 10% free withdrawal provision starting in year 2. And then Liberty Bankers Life at 2.1 with no free withdrawals offered on their 3-year MYGA. Moving on to 4 years, Ocean View again at the front, 2.6%, 10% free withdrawals. Nassau at 2.5 with 5% free withdrawals, and Sagicor at 2.3 with free withdrawals of up to 10% starting in contract year 2. 5 years coming in by Sentinel, number 1 at 2.9%. No free withdrawals there. Atlantic Coast at 2.9% with no free withdrawals. And then SILAC at 2.8 with no free withdrawals. Now, in Florida specifically, these two products, the Sentinel Personal Choice and Atlantic Coast Safe Haven, these rates are specific to Florida, because in Florida, all annuities sold have to include what's called a terminal illness, confined care, and death benefit rider. And what that does is, in the event that the person purchasing the annuity has an event of terminal illness or confined care or death benefit, they pass away during the 5-year period, what that rider does is it allows 100% of the proceeds in the account value, including interest, to be accessible to the beneficiaries with no penalties or early surrender charges. Not every state requires those features to be included in the annuity purchase. These are just specifically to Florida. I will tell you that if you're in a state that does not include those features can still be added, but there will be a rider charge or a fee to elect to have the death benefit rider, for example. So if I go to Texas, for example, and come into the same 5-year segment, you'll see the same product, Atlantic Coast, instead of it being 2.9, it's 3.01. And Sentinel, same thing, it's 3% instead of 2.9. And the reason for that difference is because in Texas, this product does not require those riders to be added. So you can actually, purchase those or elect to have those options, no problem, but there will be a charge to do so. Let's take a look real quick at what that charge would look like on the death benefit rider. So here's our optional riders list. So on this specific product, if you were looking to have that death benefit feature, it would be 35 basis points to include the rider that in the event you passed away during the first 5 years, 100% of the proceeds would go to your beneficiaries. That rider would need to be added at the time of the application in order to have that feature. Otherwise, if you did pass away, the death benefit would be minus the surrender charges. The benefit amount that would go to your beneficiaries would be minus the surrender charges. So we want to make sure, if that's important to you, that maybe your health is currently challenged and there's a chance that maybe something happened, or maybe there isn't, but you just want the peace of mind knowing that if it did, 100% of the value of the contract is going to go to your beneficiaries with no charges, then that rider would need to be added. Okay. Same thing with the terminal illness and nursing home care rider. It's 15 basis points for states that don't include it in the product itself. So again, each state governs their own body of insurance and has their certain requirements in order to operate in those states. Florida happens to be one that includes those provisions, but you'll notice that those provisions are built in to the rate. So for example, if you go back to Florida, we're going to see that, Atlantic Coast and Sentinel, they're 2.9 instead of 3 because they're including those provisions for that reason. So SILAC at 2.8, that's rounding out the 5-year segments. So here, 6 years. Now here's an interesting observation. Normally the rule of thumb is the longer that you go and commit to in these time deposit vehicles, the higher the rate of return would be. Not always is that the case. If we look at the 6-year, the highest 6-year for Atlantic Coast is their Safe Haven MYGA at 2.97, Nassau at 2.8, and Oxford Life at 2.75. So it's actually less, for the most part. 2 of the offerings in that 6-year space are less than the 5-year offerings. If we scoot on down to the 7 years, we're going to see Atlantic Coast coming in at 3.01 guaranteed yield to surrender, 3% by Sentinel, no free withdrawals on either one of those products, and then Liberty Bankers Life at 2.9, no free withdrawals there. In the 8-year mark, we're at 3.1% by Sentinel, no free withdrawals. Atlantic Coast at 3.1 with no free withdrawals. And Oxford Life, if you're looking for an A-rated company, Oxford Life meets that bill, and they're at 2.85% guaranteed yield to surrender, offering 10% free withdrawals in year 2 and beyond. To get closer to that 3% mark, you're going to be looking at that 5-year space. That's really where you're going to get close there. If you go out just another year or 2, you can get just above it, but not much, 3.01. And we'll see that at the 8-year mark, we're at 3.1 between Sentinel and Atlantic Coast, and Oxford at 2.85. The 9 years, no benefits here, 3%, 2.9, and 2.7 respectively. And then at the 10-year mark, again, no benefits whatsoever, 2.9 between Ocean View and Gillico, and 2.75 from Guggenheim. So again, if you're a conservative investor and you're looking for safe yield, you're just looking to grow your money at a guaranteed rate, not looking to take any risk with it, a fixed annuity, MYGA, multi-year guaranteed annuity can be a suitable alternative for those investors looking for that safe yield. And, if you're looking for something different than a bank certificate of deposit, especially. These companies, are going to offer a very simplistic way of understanding what your money is doing. A lot of them have online portals where you can log in and see the day-to-day credited interest. And if not, then you'll receive a statement that's on an annual basis. So if you'd like to work with me directly, again, I work with clients in all 50 states. You can visit our website at annuityassociation.com. Right there on that main page, click the green button to request your free report. And you'll be taken to a series of questions. One of those being, would you like to be contacted by an advisor? Simply answer yes, and I will reach out to you in a timely fashion to see how I can help point you in the right direction. So thanks so much for watching. If you've gotten some value out of this, please give us a thumbs up, like, and share with your friends and family. And if you have any questions, feel free to give me a call directly as well, or shoot me an email. Again, Jeremiah Conger from Annuity Association signing off. Hope everybody has a great day out there. Take care of one another. Thanks so much.